Welcome in this video, ZBCN coin price, what can it do from here? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most important concepts in technical analysis when examining price movements is support levels. Support levels are areas where buyers step in during a downward price movement, preventing or at least slowing further declines. In the current chart, a significant technical detail is the presence of a strong support zone located just below the current price. This support level is a point where the price has resisted downward pressure, where buyers are active, and where there is potential to push the price upward. In price movements, support points typically emerge at previous price lows, areas with high trading volume, or regions where important technical indicators intersect. The support observed here has also been effective in previous movements and has served as a critical zone where declines were halted and upward reversals began. From a technical analysis perspective, such a support area indicates that selling pressure decreases and buying interest increases when the price approaches this level. This support zone acts as an area where buyers are concentrated and where the downward momentum of price is countered. Most market participants believe the price is unlikely to fall much further below this level, leading them to initiate long positions. This situation increases the probability of a rebound, especially when volume analysis confirms growing buying activity and investors opening positions in this region, reinforcing expectations of a quick and strong upward reaction. Another factor that increases the importance of the support level is the potential formation of technical patterns in this area. For example, if the price nears the support zone and forms a hammer candlestick or a double bottom, these are reversal signals that may indicate the start of an upward movement. These technical indicators show that the market is short-term oversold and that buyers are likely to step in. A bounce from the support zone is also significant in terms of market psychology. It indicates increased investor confidence, reduced selling, and buyers beginning to gain control. As a result, a reaction from this key technical level generates a positive signal for the continuation of the trend and sets the stage for investors to strengthen their positions. During this process, market sentiment can shift positively, accelerating upward movements. In technical analysis, support zones are also seen as buying opportunities. When the price reaches these levels, it typically signals fair value and provides an opportunity for investors to open positions with minimized risk. Especially for medium and long-term investors, reaching the support area is viewed as a favorable entry point. This contributes to further market strength, encourages new buying, and helps the price gain upward momentum. In the current technical structure, the support level holding firm paves the way for a strong upward bounce from this area. Such a move could strengthen not only the short-term trend, but also the medium and long-term outlook. A rebound from the support level, supported by trading volume, would attract even more investor attention and drive the price to higher levels. Additionally, an upward movement from the support zone could lead to the breaking of previously established resistance levels. At this point, with the strength gained from the support level, the price may move toward key resistance areas, and as these resistances are broken, the trend gains strength. This opens the market to a broader upward range and reinforces positive expectations among investors. But we cannot make decisions based only on support levels, so let's take a look at other metrics as well. Stay tuned. In technical analysis, one of the fundamental building blocks for evaluating price movements is channels, chart formations that show the price moving within defined boundaries. Specifically, downward channels indicate weakening overall momentum in the market, the dominance of selling pressure, and that the price consistently oscillates between the upper and lower bounds. Currently, a clearly defined downward channel structure can be observed on the chart. This channel shows that the price is moving downward in a steady and controlled manner, yet with a distinct rhythm and boundaries. The fact that the price has now reached the lower band of the channel is considered a critical and positive signal for investors. The lower band of a channel is typically seen as a point where the price temporarily pauses, excessive selling is balanced out, and the market may recover for a while. In technical analysis, these kinds of lower bands serve as support zones and limit downward pressure. In other words, when the price touches the lower band of the channel, buyers are expected to step in, and selling pressure is anticipated to ease due to the support in that area. In this scenario, the price may be inclined to bounce at the lower band of the channel. A bounce means that the price finds support at this level and initiates an upward movement. Such a reaction increases the confidence of market participants both technically and psychologically. That's because the lower band of the channel is historically known as a level where price has previously moved and responded. Therefore, investors tend to buy when the price reaches this zone, shifting the market balance upward. If the price shows a strong reaction from this lower band, it is expected to move toward the midline of the channel. The midline is typically the level in the center of the price's range of movement and serves as both support and resistance. Movement toward the midline indicates decreasing selling pressure and that buyers are gaining strength in the market. This is interpreted as a positive development in favor of a bullish move. The midline is also an important reference point in terms of market equilibrium. When the price reaches this level, a decision-making phase may occur. Investors see this as a key resistance level, and how the price reacts here may determine the next direction. However, this upward movement from the lower band to the midline is viewed technically as the healthiest bullish attempt before breaking out of the downward channel structure. During this process, the performance of the price will be critical in terms of reflecting the continuation of market momentum and the strength of the buyers. If the reaction from the lower band is supported by volume, the probability of the price reaching the midline target increases significantly. Volume is an important criterion in technical analysis for measuring the strength and sustainability of a move. Therefore, an increase in trading volume as the price reacts at the lower band indicates that the rise is likely to be solid and sustainable. Additionally, a reaction from the lower band of the channel creates a positive effect in terms of investor psychology. Market participants feel more confident as the price bounces from a strong support. This leads to increased buying interest, reduced selling, and consequently accelerates the price's upward movement. This psychological cycle is frequently observed in technical analysis and plays a major role in shaping market dynamics. Movement toward the midline of the channel also signals a short-term uptrend. Once the price reaches the midline, it may have previously tested this level as resistance. If the price breaks through this resistance, it could begin moving toward the upper band of the channel. This indicates that selling pressure has fully diminished and the market is gaining new upward momentum. Therefore, a reaction movement starting from the lower band of the channel serves as an important starting point for short and medium-term positive scenarios. The vortex indicator is one of the effective tools used in technical analysis to determine trend direction and momentum. This indicator helps to get a clearer understanding of the direction of the market's movement and provides important clues, especially in detecting trend reversals and trend strength. What is currently being observed is that the blue line on the vortex indicator is trending upwards. This is one of the strong signals that the buying pressure in the market is strengthening and that the upward movement of prices may begin. From a technical point of view, the rise of the blue line on the vortex indicator to the upper side indicates that the market dynamics have changed and the uptrend is coming into play. This bullish signal is not only a prediction of an upward price movement on the chart, but also a sign of increased buying appetite and reduced selling by market participants. In such a situation, traders are motivated to maintain their existing positions or make new purchases. The upward trend of the blue line is also a reflection of the positive strengthening of the market momentum. The vortex indicator allows us to see trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.